In my experience inside the financial world while working inside banks and now as an independent mortgage broker, I keep seeing the same mortgage patterns unfolding. Most people give their mortgage the most attention at the beginning, at the approval stage. That's when you look closely at the payment. That's when you look closely at the rate. Once the mortgage is approved and set, you get the keys, you move in, you start making your new place a home, and then you move on with your busy life. You have so much going on, including having to deal with everything else that comes with owning a home. The mortgage, though, it becomes background noise. It doesn't get reviewed again. Nothing feels wrong, nothing feels urgent, so you don't think you need to review anything. And this is exactly what your bank wants. That's how mortgages are designed. Once a mortgage is in place, it keeps running on the agreed term unless you intervene. The less often you intervene, the more predictable that mortgage becomes for the lender. Your mortgage is a long-term contract that depends on your income, your debt, your future plans, and how much risk you're carrying. Those things, they change over time. Your mortgage does not change unless you take action. In Canada, most people choose 5-year terms. Why is that though? Have you ever stopped and thought about it? Most people aren't even aware that there are other terms and options available. Again, this is done by design. It usually makes sense for you to take the 5-year term because those offers appear more attractive than other terms, or they appear to make the most sense at the time. There's a lot more to this, but that is not the topic of focus today. And further, the issue isn't choosing a 5-year term. The issue is that renewal is often the first time you review the mortgage again after you originally set it up. By that point, you're at or close to the end of the term, and you don't have much time left to make decisions. This is how it usually plays out. You receive a renewal letter in your mailbox, the rate seems okay, but you want to know what else is out there, what other options exist. After all, you've been in this mortgage with this same lender for the last 5 years. It's your right to go out and look and do your due diligence. That's reasonable. The problem is timing. In many cases, you have a few weeks before the renewal date. That time frame usually isn't enough for you to review your existing lender's offer or compare different products or even compare and look at other lending products with other lenders, let alone move your mortgage over if it makes sense. Pressure mounts, and when there's pressure, there's anxiety and urgency. Things aren't moving fast enough, and when this happens, you revert back to doing what most people do under pressure. You freeze, you can't make a decision, and eventually you revert back to the easiest thing, which is you renew with your existing lender. But you didn't renew because you were satisfied that this was the best option after all of your research. In fact, you didn't even compare other outcomes. Your choice, it was made for you because the renewing with your current lender option, it fit the timeline best. That situation wasn't created at renewal. It was created by not reviewing the mortgage at any point during the term while you were in the mortgage. Making it to renewal is commonly treated as the responsible approach. You didn't break your mortgage. As if it's a bad thing, it's made to sound like it is. You didn't trigger a penalty. Again, a penalty is made to sound like it's an entirely negative thing. You waited until the contract ended. You were good. You don't realize that once you hit the renewal date, it doesn't leave you much room for you to plan or shop or do any of your due diligence. This date, it's actually a deadline. By the time you reach it, the decisions that matter the most should have already been made. Many people assume renewal is when negotiating power is at its highest. In practice, the opposite is often true. As you approach the end of your term, timelines shorten, lender options, they narrow or disappear, and switching becomes harder to execute. You're asked to choose quickly, often between options presented by one lender, and that's your existing lender. The flexibility people associate with renewal usually exists earlier in the term, sometimes years earlier. That's the part most people don't account for and simply just don't understand. Most homeowners do not give their mortgage a second thought, let alone monitor their mortgage. You wait until something forces a review. That trigger is usually one of three things: a headline about rates, a payment change or a life event, or a renewal notice. By that point, certain constraints already exist and make things more difficult. Monitoring and management is different. Monitoring means reviewing the mortgage periodically and asking, does this mortgage still match my income? Has my debt changed since this was set up? Are my future plans different than they were at the start? Does this structure still make sense given those changes? Does this structure still make sense from the time that I got this mortgage? Is there an opportunity for me to save money if I make changes despite anything else, just for the sake of making changes? Has the market changed? These questions, they don't require you to act. They give you information, and having that information earlier gives you more choices later. When most people hear midterm, they think about potentially pulling out equity and uncovering equity. But that's only one case. People refinance for different reasons. They refinance to reduce the interest rate, to lower monthly payments, to consolidate debt, to fund renovations, to access capital for business or investments, or to change lenders or mortgage terms if they're more favorable. Each reason solves a different problem, and each one has a different cost associated with it. The mistake that most people make here is not looking at this thinking that they don't need to do one thing. And the mistake is assuming that just because you don't need more money, for instance, that you should ignore everything else. The mistake is not overseeing things and have your finger on the pulse until the time starts to tick. One big reason why people don't bother looking at their mortgage in the middle of the term or have it managed is that they are led to believe that it costs a lot of money to break the mortgage in the middle of the term. Penalties are usually treated as automatic losses, and that's simply not accurate. A penalty is a known cost written into the contract. It's the cost of changing the mortgage before the mortgage term ends. And sometimes paying that cost could result in lower interest paid over time, improved monthly cash flow, or a structure that fits your situation better now. So larger savings overall or better flexibility can lead to longer savings overall over time as well. Other times it doesn't, and the penalty itself should not determine this decision. The goal is to evaluate whether the outcome after paying it is better than staying where you are and staying put. Most people never calculate that comparison. Over the years, I've seen a lot of situations that require a refinance, and across different refinance situations, the same patterns emerge. You wait until it's too late and you're backed into a corner. You zero in on one benefit instead of the full and bigger picture. You don't compare results over the remaining life of the mortgage. Waiting until renewal often feels safer, but it usually limits the number of realistic options that you can act on. It's really very simple. If it makes sense, do it. If it doesn't, don't. But let the numbers help you make this call, not some random thing or a feeling. If you're planning to sell soon or don't have a clear reason to make a change to your mortgage, changing it midterm may not be appropriate. In those cases, staying put can make sense. The point is not that action is always required. The point is being on top of things and having the data to spot an opportunity. Mortgages are made to be confusing for people. The more ambiguous and the less information you have as a customer, the higher the probability your mortgage provider can run an efficient, predictable business. This is done by design. It's not because options don't exist. Very few people are shown how to compare those options properly over time. That's why I built a midterm mortgage course. Not to encourage refinancing, even though the majority of people will find that the 18 to 36 month window after they get their mortgage might lead to immense savings opportunities. The goal is to explain how to set yourself up to be able to spot and take advantage of any such opportunities, and at the very least, offer you peace of mind knowing that year after year, you remain in the best mortgage for your needs. We want these decisions to be based on information and timing, not deadlines. I've put together a full breakdown. If you want access to it, there's a link in the description. I've left it for you.